All right, everybody. This is Scott. Anybody here? Check, 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 check. Testing 1, 2, 3. Thank you, Kay. Thank you, Steve. Appreciate that. So you can hear me. All right, good deal. All right, New York hears you. All right. So this is the Endeavor class, and to endeavor is to try and achieve a goal. All right. So there's a disclaimer, not going to read it, but you all know what it is. So no big deal. So all right, so we record everything. So just as a reminder to fast trackers, there are demo traders, live room subscribers in here. So we don't discuss proprietary fast track information. All right. So it's time for a new strategy. We need a paradigm shift. What is a paradigm shift? It's an important change that happens when the usual way of thinking about or doing something is replaced by a new and different way. Chart analysis is the cornerstone to confidence. Without it, you're never sure of your trade. You don't know the area we should not even put on a trade, and you don't know the weight of the big boys' bias. Are they buyers or are they sellers today? What structure are they showing, and what is the real estate of the day? Never go to the charts looking for a trade. Go looking for market structure. When you figure that out, find the wide open space based on that structure. There are 3 essential components to help your trading. The first one is structure. What are the big boys doing today, and why are they doing that? Once you got that figured out, the next thing is, what is the next probable move of the big boys? And by the way, you can't understand the probability of what the big boys are going to do until you do your 300 of everything, because that's what teaches you the statistical probability. Don't blow it off. How much am I willing to risk to see if I'm right is the final question. All right. So the real estate of the day inside structure tells you how and where to do it. In ranging markets, it's the break of the fibs and the pullbacks. We're going to talk about pullbacks tonight. Normally it's 70% of the time. Right now we're running about 90% of the time in ranges. Trending markets is, where am I in the trend? What wave am I in? Where are the PSRs and the fibs and the heart line? In both, what patterns are they showing? Continuation or reversal patterns? If a reversal, then do I have divergence, because it is mandatory to have it? And if you don't know the structure, the real estate of the day, the stop and the potential limit, you're not gambling. I mean, you're not trading, you are gambling. So become a structure freak. Know the different structures and the key elements of that structure. In trends, we're looking for what is called a mnemonic. A mnemonic is an easily memorized saying that we can remember, but the first letter stands for something we need to know. Our mnemonic is trade 4 pips daily. T stands for the trends, F stands for the fib, PSR stands for the previous support and resistance, and D stands for divergence. If we're ranging, we're looking to find the box for dollars. Identify the box or the range, find the fibs, and use divergence for all the terms. This is not rocket science. You can't execute a trade unless you can identify the structure. You must pre-plan every trade, and you can't assess risk reward unless you know the structure and where the additional opportunity is en route to this trade's target. So to make it in the Forex, you must press your winners without exception. And without exception means just that, without exception. You never make a trade that you haven't already pressed your winners. So what is the blueprint to accomplish this? Recognize that what you have been doing does not work. Embrace the paradigm shift. Methodically relearn how the market works and throw away every indicator you have on a chart except a MACD. Learn how the bankers trade. They trade price action. You accomplish this by taking each piece of the Forex and doing them one at a time so that you see the statistical probability, there we go, statistical probability of your methodology. Remember that trading is statistics in action. Learn how to recognize the market structure and the real estate of the day to find the wide open spaces where the big boys will be present. That is your only area to trade. The secret to being successful in the Forex is not finding a winning trade. It's finding a winning trade and maximizing that opportunity by pressing your winners without exception. You will only trade micros until you get your skill level to 65% and your average pip capture is over 35 pips. You will develop a currency ritual that you will follow every day, which gathers the pieces of the Forex puzzle in your pair today. This process will lead you to currency pairs that you understand. For instance, I'm a bear flag trader. Fast trackers know me as a turbo trader, okay? I trade bear flags. Therefore, I'm not interested in any currency that's doing bull flags, that's doing anything else. I'm interested in the currencies that are shorting. I'm not concerned about those other ones. The process will lead you to 1 to 3 trade setups that you can consistently execute, which increases your skill level to over 65%. And your criteria for entering is not whether you have your trade setup. It's whether you have reward for risk with this trade setup. Your reward will be a trading style that is unique to you and will consistently bring you the rewards you seek. Personal trading consistency comes when a trader consistently trades only when the trade setup that they can consistently do is consistently happening in the charts. You can break the rules and get away with it, but eventually the rules will break you for not respecting them. If you know the pair structure, you figured out the next probable move, then you can shorten your checklist to an easily executed plan. Simplify, simplify, simplify. What do traders do? Complicate, complicate, complicate. All right. Do I have a wide open space? Yes. Can I press my winners in this wide open space? Yes. Do I have enough ATR in this wide open space? Yes. You may have a trade setup. Am I going to trade a reversal? Can you answer these questions? Am I at a point for reversal? It's your job to know that. Do I have divergence? It's mandatory. Do I have a wide open space in the new direction? Can I press my winner in the new direction? Do I have enough ATR left in the new direction? And the 6 aces trade setup will catch every single one of them. The magic numbers for success are very simplistic. 65% win ratio. Lose 35 out of 100 trades. Think about that. How's your psychology going to handle that? Well, it's got to handle it because that's what's going to happen. 35 plus pips average pip capture. If you can do that, you'll be able to trade for the rest of your life. Press your winners without exception. All right. So we're going to review the IC alerts first that I've sent out. So let me go pop them up here. And here we go. And where are you? Hold on just a minute. Let me get the charts up. Where are the charts? I don't have my charts up. No wonder I can't find anything. All right. So hold on just a second. Let me pull them up. I had to reboot and I forgot to put it up. So give me a second while that loads up. All righty. So here we go. All right. And where's the IC? There you are right there. Okay. First thing I do every New York fix, I come in and I tell you, dollar index down. I have it down. If it reverses, replot the targets in reverse. Okay, so let's go look at the dollar index and see what it tells us. And the dollar index says, yes, we are continuing the process of moving down. We're not moving very fast. We do have a start of a channel here. So let's go ahead and put the channel on. There we go. Heartline proved right there. All right. So we're in a down move on the dollar index. That means pound goes up, Aussie goes up, New Zealand goes up. That means dollar Swissy goes down. That means dollar yen goes down. That means pound yen goes up and euro yen goes up. All right. So there you go. All right. You have to know those correlations. All right. So the first one I did was the pound dollar. So let's go look at it. All right, so here's the pound dollar. I had a blog post this morning and it worked out pretty well for about 60 pips, not very much, but there it is. And we're headed up here. The target is 24.62 because that's where the ATR target is. I'm here at 5 o'clock, so I mark the opening. It's a good idea if you can do that. Otherwise, you're fishing for it. All right, so I plan my day to be back here for you guys, not for me, but for you. 140 pip ATR, that's the target up there at 24.62. Let's go see what the Three Musketeers say about it. And the Three Musketeers say, yeah, we're trying to go up. 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 Won't take much to turn that up, and we already were going up, okay? So we're simply looking for a break, hook, and go right here. That's all we're looking for, with trade 1 being there, trade 2 being there, trade 3 being there, and trade 4 being there. There it is. All right. Anybody got any questions on that one? Everybody good? Good. Okay, Kay, thank you. All right. Now, remember, when I send alerts out, I'm looking really hard. I spend a lot of time doing this stuff, looking for them, all right? So when you see an alert, it doesn't mean you have to trade it, but you can go to school on the alert every time. You go and say, now, why would Scott say, I want to make this trade on an alert? Figure that out. That's your job, not just go, I'm going to go trade that, man. That's not what you want to do. You want to take an alert and say, why did he say that? I got a flag pattern to the sideways move. I already have a breakout. MACD says I'm going up and I got plenty of room. All right, see if you can figure it out. All right. All right, the next one is a Aussie dollar buy. Okay, we know the dollar is going down. The Aussie should also go up. Okay, there she is. That's the first candle to the upside. All right, the target is up here. Actually, it's 70.99. Let me put it up here. Excuse me, 7102. Why do I have 7102? Don't ask me why that's on there because I have no clue. Should be 7084. All right, which is the ATR. No clue why that's there. All right, so it's a buy, and it's a buy at 69.80, which it's already hit. So you should already be in if you're going to trade this one here. All right, so trade one is right here, right there. Trade two is right here to the T30, and trade three is to the target. 3 positions. That's why I like the Aussie tonight, because we're going to do 3 positions instead of 2. All right. So let's go take a look and see what the 3 musketeers say about that. You can quickly see right here, MACD is telling you, by the way, you are a buyer. See it? It's telling you you're a buyer, all right? So that's why MACD is so important to have on your charts. If you don't have a MACD on your charts, okay, ours comes with it. But if you don't have one, you got to go put one on. No, you won't have our setting, but you'll still have a MACD. A MACD with a standard setting is 66% right. Our MACD setting is 82% right. That's why you buy good charts, all right? The difference in 66 and 82% could be enormous, all right? Let's go to three musketeers. What do they say? We're going up, we're going up, we're going up. What do the oscillators say? We're trying to go up, we're about to try to go up again, and we're already going up, all right? So there you go. All right, so you can see the trade right there up to 70.84. Anybody got any questions on Aussie dollar? It's a beginner's currency. I try to, if it's set that night, I try to find a beginner's currency for everybody. All right, there you go. Thanks, Mark. All right, next one is going to be the Euro New Zealand. All right, Euro New Zealand follows the dollar index. Okay, we know the dollar is going down. I got a flag pattern on the dollar index right here. Nice little flag right here. All right, this is how we came into the flag, coming down like this. That means we're coming out of the flag like this, right? Now, probably 6,400 is probably the target for the flag. The AT target, however, is down here at 61. What is that? 63.84. 63.84. All right, let's go look at the 3 musketeers. And what are they telling us? They say, yeah, we're trying to go down. We might try to go down. We're trying to go down. We're trying to go down. We're trying to go up right now, but that's because we have a little up candle there and we're going flat. All right. So the preponderance of evidence says we're trying to go down in a down channel. All right. So it's pretty easy to see this trade. Here's trade 1 down to the bottom of the wick right there. Right. Trade 2 is below that. Trade 3 is there. Trade 4 is there. Euro New Zealand. Anybody have any questions on Euro New Zealand? It's not rocket science, folks. Let the charts lead you. Don't try to figure out the charts. Let the charts tell you what they're doing. Like if you have a book for a 5-year-old, a little cartoon book for the 5-year-old. Find the frog, or whatever it happens to be. It's the same thing here. What do? We complicate, we complicate, we complicate, we complicate. We make it more difficult than it is. It's a #1 habit that traders have, is to confuse and complicate the whole thing. Simplify, 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 simplify. All right, and the last one is the Aussie yen. You knew I was going to do an Aussie yen because I'm trying to get everybody to trade this thing. All right, now Aussie yen typically goes with the dollar index. It goes typically against the dollar index. All right. So what's the situation? Why do I have it down? Well, at the time, it was looking like it was down, as you can see right there. I had divergence. I had a double top in place. But now what are they telling us? We're going to break this north. Let's see if we can prove that, and we'll send another alert out on it. All right, so what do the three musketeers say? Yeah, we're trying to go up. Yeah, we're trying to go up. Yeah, we're trying to go up. Big information. We were trying to go up. We're trying to curl to the upside, and we're trying to go up. And so that means that this one is not going to go to the downside. And so we're going to send another alert out, right? So you're going to watch how I do it, right? So first thing I'm going to do is I'm going to take this and flip it around here. And I'm going to flip the target. All right, the target is at New York, whether it's going up or down, the target doesn't change. It's 169 pips from the New York fix. So I'm going to do a buy there. All right, and I'm going to take this off because that'll bias me to the downside. And I'm going to build the channel to the upside. As you can see it right here. There's the channel, and that's what we're doing right now. Heart line proved, heart line proved, heart line proved, heart line proved. All right, so I'm going to take the HSI off to the downside. Right, because right now I got a breakout. I'm going to take the trend off here because it's no longer coming back down. You can see the move to the upside. All right, so there we go. All right, so big opportunity here, folks. All right, so there we go. All right, so what is the trade? The trade setup is a break, hook, and go of this fib. Break, hook, and go to the upside. That's the trade. Where are the trades? All right, remember you can't make a trade for one. You got to put multiples in. Trade one is there. Trade 2 is there, trade 3 is here, and trade 4 is up to the top. All right, so we're going to send that out. Aussie yen. All right, let me do this here. Alert update. I use 33 pips. I'm going to the Aussie yen. I tell you, you're going to need a break, hook, and go there. I'm a buyer, and the entry price is going to be 90.30, 90.30. 90.30. All right, give it a few pips to make sure it does it. And the target is 91.72. 91.72. And we'll put correction. And there we go. All right, it's off. So Aussie yen is now to the upside. All right, big opportunity there, folks. Don't miss it. All right, there we go. All right, anybody have any questions on either? Yes, it is. It's a day chart trend right there. That's a day chart trend coming down, Chris. I don't have them very often, but if it's there, I put it on because I want to know where it is. And we got plenty of room up to that day chart trend. See? So good observation, Chris. Thanks. All right, anybody got any questions on those? Any questions at all? So listen, you got 4 opportunities possibly tonight. That's right, Steve. So, you know, if it's got an Aussie in it, what you want to do is wait till at the announcement. And remember, you only trade a fundamental if it continues the move that's already started. All right. So if you want to wait for this one, that's absolutely fine. You wait for the announcement. It's probably going to stall out here anyway. And then you place your entry orders to the upside. And if it comes out Aussie positive, then you want to trade it with entry orders. All right. So if you don't know how to trade a fundy, on the first videos page, there is a video on how to trade a fundamental announcement. All right. So good observation again, Steve. You're right on top of it. Nice job. All right, let's go to the lesson tonight. All right. So hopefully this is going to be a good lesson for you. All right. We'll see what happens here. All right. So last week was the first week of May, so we did our real estate of the month trade. It was the pound dollar, and it has not materialized yet, but it still could. We got 4 weeks, 3 more weeks to get it going. So we had the pound dollar, and it's not getting in position for us yet, but we're still looking at it. We're constantly watching it, right? So our lesson tonight is probably one of the most important lessons you'll ever have in your life. How do I trade pullbacks? Do you think that is a valid topic? Is everybody there? How do I trade pullbacks? Everybody there? Okay, yeah, okay. All right, so let's tackle this. Remember, endeavor is about doing one thing, not about doing a bunch of things. It's about doing one thing and figuring out what they do. All right, so we're going to start. We're going to go over here. Let me go over here to the majors where I can just draw without anything. We're going to start over here in the pound. All right, now one of the things you got to remember is the school is in the past. The school is always in the past. All right, so when you made this trade, if you were going to make this trade right here for this one, this is a great trade. Why? Because the pullback is behind you. You see that? If the pullback is behind you, they can go. All right. Now they go sideways here. And what do? A pullback here. Okay, now we can make this thing go. Down they go. They didn't find enough sellers, so they went a sideways move, but they continued it down. All right. So this pullback, always remember this, the pullback is my friend. If you have to type it out and put it on your computer, do it. The pullback is my friend. All right. So let's go look at this one right here. All right. So we're not going to take that. We'll do this one right here. Okay. So now the second thing that's really important is to make sure you get the correct leg. Can everybody see this belongs to itself? That's one leg. They're called bent legs, by the way. And the first part of the leg was up here. Then we had a little sideways move. And the second part is this. This is trade one. This is trade two. All right. Now, when I'm looking for a pullback, now this is why you got to do 300 of them. I know to take this one, but there's no rule about it. You use what the real estate of the day tells you to do. So what I'm going to do is I'm going to fib from the swing high to the swing low right there. And you see that they never turn in the middle of nowhere. Remember this. Bankers never turn in the middle of nowhere. They only turn where there's a mathematical reason to do so. Therefore, my job is to find the mathematical reason. That's my job, right? So the 618 is a 62% discount of this move. Does everybody understand that? This move right here, and this is a 618, which is 62% discount for the continuation to the downside. All right. Now, you can obviously see what they did with that information. There's what they did with the information. All right. Now, notice another thing. When you do pullbacks, you get the targets. You get the targets. You see that? So a pullback gives you more than just where do I take the entry? It tells you where the targets are. And this tells you this is where you might move my stop. And this is where I might move my stop. Before I go on, I want to make sure everybody understands that. All right. Does everybody understand that? Don't make it, it's up 20 pips, man. I think I'll move my stop. That's BS. You're not a trader, you're a gambler. You're not a trader, you're a gambler. All right. If there's not a mathematical reason to go to, then there is no reason to move your stop. But if there's a mathematical reason to go to, then you know exactly where to move your stop. Right. Now, of course, you could put a channel on here and you'd be would you mention properly the membership measurement of the fib tool? Okay. I think I got it top to bottom. Okay. If you're going down, you go top to bottom. If you're going up, you go bottom to top, right? And here's what you need to think about. It's a great question, Mark. These are discounts. There's a 21% discount here. There's a 38% discount here. There's a 50% discount here. There's a 62% discount here. And there's almost an 80% discount right here, right? Now, the market moves to these numbers and turns. So we're going to do a bunch of these. So you're going to see, yep, that's what they do. All right. Now, by putting that on, as long as you've made your Fibonacci retracement key an extension key, you also get the extensions here. So they always think pullback equals discount. Pullback equals discount. All right. So Mark's in New York, and Mark decides to go down there to Tiffany's. All right. And he goes down to Tiffany's, and he's looking in the window, and son of a gun, there is a Tiffany lamp in there that's on sale for 50% off. His wife has always wanted a Tiffany lamp. She doesn't know it's 50% off, but he does. What does he do? Mark goes in there and he buys the Tiffany lamp because it's only 50 grand, right? He buys it because it's 50% off, right? That's why he does it, see? And he does that. Now, he doesn't tell her it's 50% off. Said, honey, I love you so much. Here's what I'm doing for you. And she thinks he hung the moon. But what did he do? He took advantage of a 50% discount. All right. What if they said it's 62% off today? Wow. That makes me even want to buy it more. Right. Now, at a 21% off, if it's, when you see 20% off, how many times do you bite? Think about it. Think about it. You get emails every day. You can do this right now, 20% off. Does everybody get emails like that, 20% off? All right, do we do it? That's a question. No, it's not enough of a discount. It's not enough. And that's exactly the fact. If it retraces to the 214, now understand what the 214, the 214 is exactly the 786 the other way. So in other words, if I were to put this fib on to the other side, I'm going to do it right here, you're going to see that the 786 fib is right there, right? Now, fast trackers don't know why that's important, right? But at the 214, you do not have risk for reward for any trades on the planet. None at all. All right, so I'm going to pull that up and prove it to you here. Hold on just a second. Come on. All right, hold on just a second. Here we go. All right. So one of our fast trackers, it's actually a couple, Handy and Haken. They live in Peru. They live on the beach in Peru, beautiful house. And they are traders, they're fast trackers, and they're full-time traders now. But before they left, they sent me this little thing and said, Scott, probably this little graphic made the difference between us becoming pro and us still trying to do this as a hobby. Well, what was it? Understanding that when you get a retracement to 214, you have a 1 to only 0.62 relationship, right? So you're going to risk $1 to make 62 cents. Does that make sense? I'm going to risk $1 to make 62 cents. No, it doesn't. Right? However, every other fib retracement, 382, you're going to risk $1 to make $1.06. At the 50%, you're going to risk $1 to make $1.54. You're going to risk a 618, you're going to risk $1 to make 2.32. And at the 6786, you're going to risk $1 to make almost $5. All right, 1 to 5. And that's the first target. That's the first target. So you can see that's the target. So at the 618, all right, at that 618, we had the ability, no matter what, if as long as it's not a 214, you have risk to reward. You don't have to think about it anymore. You don't have to know what it is. You just know as long as it's not a 214, I have risk for reward. All right. And when I put the fib on, I also now know the extensions and the next extension if they go down. All right. So let's go back a little further in the past. Now, remember, this is what you need to do when you're practicing it. Why do I need to do this? Because the school is in the past. What you have in the past is you have printed candles that are based on what they printed up here. Does everybody understand that? All right. Whatever they did up here dictates what they're going to do down here. See? All right. So let's see what we got here. All right. We got a solid move to the downside and we got a pullback. All right. So we put the pullback as my friend. Once I know direction, and can I tell direction? Yes, I can. Moving average is headed down. This moving average is going down. The T3 is going down. The 30-minute moving averages are going down. MACD says you're a seller. All right. Does anybody want to buy this up here? A zero line break? Exactly right. Yeah. See. A zero line break at the top. Very good, Mark. And so what Mark's observation is, and this zero line break happened right at the top, which is why they can move it. If it happens at the bottom, it took all the energy to create that and they won't do it. All right. So what do? I pop a fib from the swing high of the swing low of that leg. All right. Now you can see there's the 50%. The first money comes in at the 50%. Doesn't work. They come back up. They're within 2 pips of the 50%. That one looks pretty good, but it's still not working. They go back up to 382, give a 38% discount. And what did they do? What did they do? Well, you can see what they did. Went to that target, went to that target. See that? That's what they did. Right? So in this case, the 50% discount was not enough, but it was enough to get it started. And then the 382, the 38% discount got the rest of it. This is why you spend the time in the past. For every 1 hour you spend live, you need to spend 3 hours in the past. So hopefully what's going to happen after we do this lesson, everybody in this room is going to do this week. They're going to block off some time and they're going to do nothing but pullbacks. And you're going to do 300 at one time, and you are not going to do anything else until you get your 300 done. And you're going to get a little sheet of paper here, and you're going to put, okay, I'm doing fibs, and you little thing. Yes, did the fib retracement create a continuation? No, no, it did not. And you go, yep, that one did. Yep, that one did. No, that one didn't. That one did. That one did. That one did. No, that one did. This one did. This one did. And after you do 300, you divide the no's into the y's, and now you know the percentage. It's very rare. All right. It's very rare to hit a 786. Very rare. And in fact, I'm glad you brought that up. If you're ever in doubt, where should I put a stop? Put it above the 786. All right. Because the 786 is a 78%, call it 80%. It's an 80% discount, right? If they go that high and they get the 80% discount and they want to continue this move, and let's say it just, you know, they didn't get it and they went up to there, where are they going to turn? Well, they're not going to turn to 100 because they got this one right here. They're going to turn here. So if you put your stop 5 to 7 pips above the 786, you'll most likely live through that, number one. Number two, you now have an 80% discount on this thing. What do you want to do that? That's where you place a trade. Next trade would go in on the break here, right there. Next trade would go on the break here, and the next trade will go on the break here. All right. So now you go, okay, I see what you're talking about. But hey, you broke into this area, your entry order went in. What should I do? All right. Now, what you got to do is you got to go, okay, let's look at what they're doing. So they pulled it back up. We'll take this back off. All right. And now we are going to retrace this move. All right. So we put a fib from the swing high to the swing low here. All right. Remember, the pullback is my friend. See, if you think this is your enemy, you're in trouble. All righty. Oh, man, it's going against me. Oh, no, you're already in trouble because they're looking for sellers because it's a seller's market. Now, what tells you not to get out of this trade? MACD. See what MACD says? That's right. And once you learn those currencies, right, Robin, then you know this one goes to the 382. The pound dollar goes to the 50. The pound yen goes to the 618. You know, you learn that as you go do your work. All right. So what does this one tell you right here? I got a 0 line break and I got a T3 break right here at the bottom of the move. What should I do? You should exit. You should exit. And let's see what happens if we did that. All right. Let's see what happens. Come on. Oh, well, it went up to the 618 and turned a little higher than the 618 and came back down. I'd still exit. Why? Because I major in risk, not in reward. Right? And ultimately, they finally put it down over here. Exactly right, Mark. Right? So that's exactly a fast move. A fast move to the downside means we found a lot of sellers, but now we don't have any more. See that? So that move to the upside is to give a discount so sellers will come back into the market. All right. So 0 line break there, you made money, pulls back up, and then you watch it and you go, oh, wait a minute, I know what this is. This is a flag pattern because I've done 300 flags, so I know it's a flag pattern, which means however I got into this thing is how I'm coming out. So there it is right there. See how they did it? They did exactly that because that's what they do. Huh? Let's get off the British pound here for a minute. Let's go over to the Aussie dollar. Nice beginner's currency, doesn't do a whole lot, but it's got a nice ATR right now. So let's go back in the past. That's fine. Oh, we got an up move here. Let's take the up move. All right. So I want you to see how many pullbacks there were first. All right. Here's a pullback. 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 Here's a big pullback. All right. So all these pullbacks, and what did they do? They kept going up. Why did they do that? Oh, I'm on a day chart. Oh, thank you. Okay. Thanks. Let me get off that. Why am I on a day chart? I'm going to 60 here. Thanks for the heads up, Kay. All right. So let's go back. Well, we'll just take this one here. All right. So here we go. All right. So we come down really hard off of close and reverse here, and we run out of sellers. All right. Remember, the reason to go up is what? The reason to go up is to discount so they can find the sellers. All right. So we pop a fib from the swing high to the swing low. You're going to see this is a 214. And so there's no risk and reward to the 270. Do you see how that, did they know where it was? Let me ask you something. Do you think they knew where, when they broke this bottom, do you think they knew where that was? Do you think they knew where that was? And do you think they knew where this was? Do you think they knew where they were? Absolutely they do, because they trade the math. Therefore, if they know where that is, my job as a trader is to know where that is. Okay, so this is a non-trade for you and me because we don't have risk and reward. It's a great trade down to the 1270, but you can't prove that. The only thing you can prove is the next target. All right, so you pass on that trade, all right, on that one. However, because you see it's structured, you see I got a zero line break. All right, where did I get the zero line break? I got it at the end of this move, so this pullback makes sense. All right, when it makes a turn here and breaks the bottom, and I got a zero line break right here, and MACD says you're a seller. Can I make this trade right here, and this trade right here, and this trade right there? Can I make those trades? Even though it retraces to 214. Yes, because they proved this is what we're doing. We are going to do this, right? And if I understand what they're trying to do, I go, okay, I understand it. And that works in my risk and reward parameters. And I like what you're doing, right? So yes, in this case, I can't take the pullback, but I can take the break of the zero line right there. All right, let's go back here a little further. Well, I'm on a 60, so it could be K, down on a 10-minute chart. You know, remember that's on, yeah, on a 10-minute chart. So let's go see where it is. Here it is right here. Break, hook, and go right there. See it? Break, hook, and go right there. Yep, yep. Okay, good. All right. And you know, for some traders, they'll say something and all of a sudden that little tweak will make all the difference in the world. They go, oh man, I've been looking on it on a 60-minute chart. Why am I doing that? So those are the things that's what this purpose is to give you those aha moments. All right. All right. So let's go back up here to 60 and let's take the move to the upside. All right. So here we go. All right, so here's the first move. All right, so first of all, let's look at all the pullbacks. Pull back, pull back, pull back, all the way down to here. Sideways move here and pull back right there. All right, so you got 1, 2, 3, 4, 5 pullbacks en route to the target, which happens to go all the way up to, it's called 75.50 from 71 150. So 400 pips. 400 pips with 4 pullbacks. Gee, I don't know. I don't know whether I like that or not. All right, so the first one you fib from the swing high to the swing low right there. And we got a 786. And see how they know that 786? A wick here and a close in reverse here. Now, why would they want to trade this? Because this is the risk, that's the reward. Anybody interested in that? Fast trackers know what it's called. All right. The 786, because it is the last fib, gives the lowest risk for the highest reward if they take it. The lowest risk for the highest reward. Now, the problem is that statistically, the 786 doesn't happen that often, right? So you can see here that if you just target the 1270 off that 786, it easily made it there, right? Now, we get another one. All right, and this one's a nasty one. You see that wick coming down? That's a nasty one. Let's see if they respected the numbers. That's exactly correct, Robert. All right, exactly correct. So here we go from swing low to the swing high, and this one was also a 786. See that? Now MACD tells you to take it. This is why MACD is so important to you. MACD says you need to take that thing. Now up to the 270, they blew right for the 618, but because the 786 is there, they know right where the 127 is. Hold on. They know right where the 1270 is. Let me clear this, and let's go see. You think they knew where it was? See, they knew it down here where that is. They're trading the math, folks. And if you're not trading the math, you're gambling. You're guessing. I think it's going up, man. I think it's going down. Well, that's it. So sweet, 400 pips there. Not too shabby. All right, let's go back in the past again on the Aussie dollar. Now, one of the reasons that newbies need to trade the Aussie dollar is, first of all, it will teach you how to trade pullbacks, number one. And number two, these are not typically big pullbacks. All right. So here's the first one. All right. Here's the first one. Here's the second one. Here's the third one. Here's the fourth one. Here's the fifth one. Here's the sixth one. Now, in the process of that, they went from 7,100 up to 7,500, 400 pip move. And what did they do? 1, 2, 3, 4, 5, 6 pullbacks. All right. Now, if the pullback is your friend, not the enemy, you have 6 opportunities to trade this. If the pullback is your enemy, because why would it be your enemy? I bought right here, man, and the thing pulled down and I got stopped out. I bought right here and it pulled down and I got stopped out. I bought right here and it got pulled back and I got stopped out. I bought right here and it got pulled back. What's your problem? It's not, is the only thing is your entry. Your entry is wrong. Not you're buying at the top or selling at the bottom. All right. So let's see how they did this. All right. So here's the first big one here. All right. So we got a big, nice, big one from the swing low to the swing high right there. And there is the 382. And they didn't even get to the 50%. And each of those pullbacks is a session long. Good point, John. So in other words, you got to get it out of your head that I'm going to make a trade and it's going to go in the next 2 hours and I'm done. Because that's not the way the market works. If you're trying to trade like scalpers, which is go in the market and get out, you're not trading with the bankers, you're trading against them. All right, right. Real estate of the day. But if you're trying to trade with the bankers, then you got to have their math. Okay, so they almost to the 50% here within a couple of pips. Now, let's just see if they knew where the targets were. Here's the 270. You can see they knew that. Here's the 618. They knew that. Here's the 1270. So from this very first pullback, this, and this was established. Does everybody see that? That was all established from the very first pullback. All right. I don't know what they're doing. Go do it. All right. Now, there are other pullbacks. Okay. So what you can do is you can leave this first one on, knowing that your trade down here that you took over here is targeting this. But each pullback gives you the opportunity to add to the position. All right. So the next pullback is here. So I'll put a fib on this swing low. Come on. Swing low to the swing high right there. 382. Right. 38% discount. They took it. 38% discount. They took it. 38% discount. They took it. So 3 times they took it. Where are they going now? Up to the 270. Up to the 270, up to the 618, and now we got a higher 1270, which comes off the other one. Where did they go? To the pip. To the pip, to the second one. Do you think they knew it? Daggone that Scott, he's so lucky. See, the bankers are mathematicians, folks. If you don't get a handle on the math, all right, I'm an artsy-fartsy guy, so am I, so I understand this. I'm an artsy-fartsy guy, okay? Then look for the pattern and plot the targets, because I know the targets are going to be hard for you, but plot them because it's a mathematical deal. Yeah, pressing the winners, suppressing the whiners. Exactly right. All right, because if they know where the math is, I got to know where the math is. Now the engineers go, this is awesome, man. I love this. This is just crazy how good this works. It goes right to the math. All right. Our next pullback is right here. All right. So we can pop the fib from the swing low to the swing, get the right tool, Scott. Swing low to the swing high right there. There it is. Pull back to the 786. Where are they going? Right up to the 1270. All right. Did they know the targets? Did they know this target? Yep. Did they know that target? Yep. Did they know that target? Yes, they did. Tony, you don't know. You don't know. That's why you have to have rules that say, I don't trade at the 214, but at the 382, I'm interested, especially at the 50%, because there's no such thing as a 50% retracement. There is no such thing as a 0.500 fib. Then why is a 0.500 fib on a Fibonacci retracement? Because the market overwhelmingly uses it. Why would they do that, Tony? Because it's a 50% discount. You see that? All right. Now, you say, okay, I'm gonna go ahead and enter at the 50%. All right. And what does it do? I'm going to enter the 50 right here, and that value is at 73.20. The 618, the value is 73.14. It's 6 pips difference. All right, the 786 is at 73.05 from 73.20, so it's 15 pips. You're talking 15 pips total difference there. Now, Tony, have you ever made a trade that went against you 15 pips and then went 100? Or is it more likely that I traded it and went against me 40 pips and then it went 15? Yeah, exactly. All right. See, what the problem is that we're not in touch with the math. See, we got to get in touch with the math. They know where the target is. So can you. All you got to do is what I'm doing right here. Another pullback here. What's their thing? They're trying to get to that 1270, but they keep running out of buyers. So they got to pull it back and do it again. So they do it one more time from the swing low here to the swing high right there. Come on, get on it right there. And this is it's a 786. All right. So they went to the 270. They went to the 618. They did not get to the 1270. You see that? They did not get there. All right. Yeah. Well, the stops are so easy if you do it this way, because the stop is the last support or resistance plus 5 to 7 pips. So when it pulls back here and bounces, this is my risk. That's my reward. All right, pulls back here and bounces. Okay, here's my risk right here, and there's my reward. Pulls back here, right here. Here's my risk, and my reward is still the 1270 up there, which was established from the very first move. Remember, the very first move establishes, if they can get it going, the first move establishes where they're going. All right, that's why we can use things like the HSI. Let me go over here and pop it here. So once we get to turn around here, put the HSI on. Now you won't have that on MT4. The only place you have it is here. And you go, I'm a buyer, and let's see if they knew where they were. They knew that one. They knew that one. You think they knew that one? If we break above here, we're going to the R5, and we didn't quite get there. Almost though, but didn't quite get there. See that? You do every pullback, Chris. That's a great question. You do every pullback. All right. And remember, you got to keep track of your charts, because older fibs you want to get rid of unless it's that first dominant move. All right. The first dominant move is the banker saying, by the way, this is what we're trying to do. Let's prove that to you. All right. Let's go back here and find a bottom. All right. Here's a bottom. All right. So this first dominant move with the pullback, and it usually happens pretty quick, all right, establishes what they're trying to do. 1, 2. All right. Do they know the 1270? Absolutely. But in this case, because it's the first dominant move, we have a pullback, we can use the fib extension key. So we go get the fib extension key, and we go from swing the low to the high to the third position right just here. And now the target is the 261, 4.236, and the 6.854. Let's see if they get there. Within pips of it, that's it. I recommend it always at that. Once you know it's trying to trend, all right? Now you can do them in ranges too. I'm on the Aussie here, so you know it's going to do them. All of them are going to do it because it's the math. All right, let's just put it on there. All right, so here we go. What we're trying to do is, remember, we don't make a trade unless we know the exit. So did they know that one? Yep. Did they know that one? Yep. Did they know that one? Yep. Do they know the R4 up here? Let's just go see. All right, to the pip, to the R4 right there. All right, the next one is the R5. Are they going to get there? They're not going to get there. All right, see that? All right, so what you're doing, these tools allow you to find the math before the move. Let me say that again. The tools on ProAct Traders allow you to find the math before the move. Anybody want to know that? Would that be a good thing to know from the very beginning? No one else has. No, nobody else has it. Right. Let's go find a top. Right. So let's do it both ways here. We'll do the whole thing. I'm going to remove all this off of here. All right. So here we come off the top. Right. See the pullback. There's the pullback. Why is there a pullback there? Because they ran out of sellers. So what's the purpose of going up? Always remember, what's the purpose of you going up? The purpose is to go up to find sellers. It's not to find buyers, it's to find sellers. All right, so now we pop a fib from the swing high to the swing low, and that's a 50% retracement. And you see what they did with it? What did they do with it? All right, straight down to the 270, then to the 618, then to the 1270. Do you think they knew the target? Do you think they knew the target? They said, yeah, exactly. Of course they knew it. They know everything. All right. Now we can do something different here. All right. Now that we got the first move, two things we can do is we can put on the Fibonacci extension, which is 1, 2, 3. Oh, I got the wrong tool. Let me get rid of that. How did I grab that? I never grabbed that thing. Get rid of you. Oh, I'll just take it off. I know how to get rid of you. Bye. I never use it. Andrew's pitchfork. I don't know why it's there. All right, so we'll do it again. All right, so I'm going to use the Fibonacci extension key. We already know they did the retracements. 1, 2, 3. All right, so now they knew that one. They knew that one. They knew that one. They knew this one to the pip. And if we break this to the downside, we're going to the 4.236 to the pip. See that? Yeah, but what they had to do all this in between? That's because they didn't have enough sellers. So how did they make that happen? They did an A, B, C to the top to a close and reverse. Down they go, sideways movement, right down to the target. All that was known back here. All of that was known back there. Every single piece of it. All you got to do is look at it and say, well, I guess they knew that number. Well, how did they get that number? All the way back here. Are you doing this? Are you doing this in your charts? No, I'm not doing that. I'm trying to scalp 5, 8, 10 pips. You're going to lose. You can't be successful doing that. All right. You got to trade like a banker, which means you have to learn what the bankers do. All right. All right. Now we got another big pullback here. Okay. So now what are we retracing? When we have this big pullback here, we're going to retrace this move right back here, right there. So what should I do? I should fib it. All right. So I'm going to take this off. By the way, if you're not doing this on every single move, then you're not trading. All right. I'm going to put it on here from the swing high to the swing low. What am I looking for? What fib are you turning on? So essentially they turned on the 618. They tried to get the 786. They were not successful, but they did get a close in reverse here, which means the sellers came in. So where did they go? All right. Let's go look and see if they knew where they were going. All right. So from this pullback, where did they go? They went to here. Then they went to here. They tried to get to here, were not successful. So what did they do? They did an A, B, C to the top, and down we go, and right to the target. See that? With that initial big boy, you would exit and re-enter. Yeah, when you here, great. I'm glad you brought that up, Tom. All right, so Tom, here's the deal. You need to always remember why you made the trade. So let's go back here and we see this thing right here. You see, I could put a channel on it, but you know it's a channel, right? So they respected it here, they bounced down here. All right, I'm looking to go down to these targets down here. But what's my problem? All right, the minute they break this out, I take the trade off. The minute it breaks it out. I remember why I took the trade, because we were going down. Well, we're not going down anymore. Why are they going up? Because they don't have enough sellers. Therefore, they got to go find some sellers. Okay, I don't want to be in this trade to the downside and live through 150 pip retracement. So I'll walk away from this and I'll take this off. See that? Does that make sense, Tom? All right. Always remember why you made the trade. I made the trade because it was on a channel to the downside. I had all that done. And then when they couldn't break it and they know they have to go up and find sellers. And when they know they got to do that, they're going to do that. All right. So what did they do? That's exactly what they did. But they did it with an A, B, C to a close and reverse. That's exactly right. When you make a trade, you need to know, if this doesn't work, where will I take it off? You got to think about that when you make the trade, not later on. You think about it then. And you had lots of heads up with the zero line break, T3 break to the upside. See that? Lots of heads up says, hey, your trade to the downside is toast, man. Why don't you pay attention? Get out of it. Look to the right of that over here. Yeah, now we got another one here, zero line break here, T3 break, flag pattern, right? What should we expect? We should expect, because our job is to anticipate the market, right? Got a close and reverse here. What should we expect? If they break this line right here, they're going to the 270, they're going to the 618, and maybe they'll go to the 1270. Let's see what they did. To the pip to the 270, all right? Almost to the 618, another A, B, C to the top to keep it going. And what do? Down to the 618, and down we go, and right to the 1270. All that was known back there. All that was known back there. All right, so now we remove this, move all these, and you see you have another retracement here. The retracement is my friend. The retracement is my friend. Here's the retracement, and there you can see what they did with it. See, always look and see, what did they do with the information? That's what they did with it. How did they know to do that? How did they know to do that? All right, so let's work it up. All right, so we got a big move here from the swing high right here to the swing low right there. And where did they go? 618, 618, 618, 618, and they finally got enough sellers in. All right, see that? So where did they go? All right. So you see what they did, right? You had a ABC retracement right there. You got a zero line break right there. See, notice what they did with that. That's what they did with that. Down to the target, down to the target, down to the target, and here's the overall target down here. Are they going to get there? I don't know. I haven't looked at any of these charts. All right, let's just see. Nope, they don't get there. All right. So now you got to remember. Okay, I got a single line trend line across here. When they break that single line trend line there, and I'm a seller, I'm out. I'm out of the trade. All right. None of this, oh, it's going up. I hope it comes back, man. I just hope it comes back. Oh, man, I'm pulled my stop. And guess what? I'm upside down 300 pips as it goes screaming up to the upside. What was my problem? I didn't execute. I'm not a disciplined trader. I was guessing, and I didn't have any discipline on my trade. My trade was to the downside. It broke that to the upside, and I did not bail on the trade. That's what I did. Who's responsible for that loss? You are. You are. No, the doggone broker took me out again. No, the broker didn't take you out. You're not paying attention to the market. All right. Let's go back a little further. I'm on the Aussie dollar now. Remember, this is not a rock and roller here. I'm at the end. Okay, let's get rid of that. Let's go have some fun on exotic. All right. So that's $1. Let me go to the exotics. Let's go to something like Euro New Zealand or something like that. So here's the pound New Zealand. Woo, baby, rock and roll. All right, but they do the same thing. It's just bigger targets. All right. Now look at the size of these pullbacks. See, these pullbacks is why when you're going to trade the pound New Zealand, you got to be prepared for that. You got to be prepared for that. You got to be prepared for that. But it doesn't matter. They're still doing the math. All right. So here's the let's look first at the pullback. Here's a pullback. Here's a pullback. Here's a pullback. Here's a pullback. See them? 4 pullbacks. All right, there you go. All right, pretty much a sideways market here, but still, you don't know that until it's over with. And you go, wow, that was a sure sideways market. Okay, so what do? I pop a fib from the swing low to the swing high, and that gives me a 618 reversal. I mean, right there, that's where they pulled it to the pip at the 618. You think they knew where that was? Of course they knew exactly where it was. It was a 62% discount. They took it. All right, where'd they go? To the 270 and to the 618. And the overall, remember, this is the first one. So the overall target, the first one is setting the target. Let me show you what I'm talking about here. Can everybody see that no matter what they did, that was still the top? That's right. I'm on a 240 here. That's why, John. Sorry. You know, I should get. Let me get out this in here. But it still doesn't matter because they still went to the map, to the pip. Right. Let's go down to a 60. We live in a 60-minute world. All right. Let's get over here and we get rid of all this. Thanks for giving me the heads up there. Yeah, the market is fractal. All right. So let's go back over here. It's fine. Let's see if we can find a move. You see the moving average is going down here. All right. So let's just do the down move here. All right. So here we go. All right. Remember, first one sets the move. All right, so here we go. We're gonna do down to here. All right, 786 to the pip to the 1270. To the pip to the 1270. Did they know it? Absolutely, they know it. All right, let's get rid of it. Let's do this. Let's use a Fibonacci extension down to the bottom here and up to here. Okay, now we got bigger targets to the 1.0, to the 1618, to the 2.618. I got another one down here, the 4.236. All right, let's see if they get there. Yeah, almost got there. There they go, down to it. All right, now they're running out of sellers, so they got to pull back. All right, they pull way back. Oh, that was it. So that was a reversal. All right, so the point is, do they know the numbers? Yes, they knew the numbers. Okay, now we got another pullback right here. Now, this is important for you to see. I got a flag working right here, and the flag is not producing what I want. I want it to produce sellers, and it's not producing sellers. So what do they do? You should be able to see this right there. Now that's called the head fake. Now, when they do it like that, flying like crazy, what happens to all your indicators on your MT4 trading view? What happens to your indicators? Do they go down or they go up? They go up. And all the dumb money, because they're not trading with the bankers, they're trading their stupid indicator, buy there. And there's what the result of what they did. They creamed them. They absolutely creamed them. All right. But we can figure this out. Okay, I got this figured out. So we couldn't get the flag to work. So what did you do? You did a break, an A, B, C to a close and reverse with an exhaustion wick. Right. So that's a pullback. All right. Now the dumb money thinks it's a buy sign. You're not that dumb. You're smarter than that. Right. So you pop in here, you put a swing low across the bottom of that right there. You see that? And now you go back here to this last fib. Oh, thanks, Joe. You go back to this last fib. So what's going to happen? We are retracing some move in the past. It is this move right here. We're retracing this move. So I go back and I fib it. All right, I go back here and fib it. You're going to constantly be doing this, folks. So get used to it. Fib it from the swing high to the swing low right there. And you can see 786. Do you think they knew where that was? Is there any doubt that they knew exactly where that was right there? To the pip, to the pip. This is what they did with that information. They drove it right down to the 270 right there. See, they took it down, right? Why? Because of risk and reward. This was their risk. This was their reward. Even if they don't go to the next target to the 618, what's that, 1 to 4? I'm going to risk 1 to make four times that amount of money. That's a no-brainer trade. See, that's what you're looking for. You're not looking for, where's my moving average crossover? That's bull. That's just total BS. That's total BS. All right. None of it works. All right. So then you get down to the 270 and they're not successful. All right. So what do? They pull it back up again. How do they do that? They do an A, B, and a long C. See how they did that C? All right, you got to get used to that. When you do ABCs, you'll realize that's normal. All right, they're not perfect. No, they're not perfect. All right, so I'm going to remove that. And I got another one to the downside, swing high to the swing low. This one goes to the 618. Do you think they knew where the 618 was? Is that just a lucky guess? No, it's a 62% discount of this move. That brings the sellers in. Where's the target? 270, the 618, maybe the 1270. Do they know the 270? Absolutely. All right, they break to the downside, they're going to go to the 618. That was it right there. That was it. All right. And what told you not to trade it to the downside? Well, it's pretty clear. MACD said, don't even think about going down anymore. That's why you got to have a MACD on your charts. I use MT4. Well, again, put a MACD. Yeah, and I got a slow stochastic, an RVI and RSI. Rip all those suckers off. Get rid of those things. They are lying to you. They're the ones that are going to get you in the head fake. That's exactly what they're going to do. And you're going to get creamed and you go, doggone broker, stop me out. No, you're using crap. All right. Let's get out the pound New Zealand. Let's go to something like my favorite currency, fast becoming even more over the euro yen. Now, I've been trading the euro yen for 20 years, folks. So when I tell you I'm about to change to my favorite currency, new favorite currency is the Aussie yen. All right, you're going to see why here in just a second. All right, so let's take this down move here. All right, so we have a start of a move. Remember, we got 1, 2 right there. All right, so that sets the target. 1 right there. So the target is now a 1270. Well, they went right to it because it was a small move. But do you think, here's the question. Do you think they knew where it was? It's been over the last 2 months or so, Owen, Jessica, about the last 2 months. I've been trading it like crazy, and it just moves so sweet. All right, so they knew exactly where that was. See that? All right. Now I got the option now because I can use the Fibonacci extension. All right, so I'm going to remove all the tools, and I got a little one here, and eventually I'll get a bigger one. But I'm going to do this from 1, 2, 3. All right. Now, did they know the 2618? Did they know the 4.236? Did they know the 6.854? Absolutely, they did. So which one did they use? Both of them. Which one they use? Both of them. That's what they did. All right. Now we got another pullback here. Ooh, sweet. Now, of course, I'd leave that stuff on, and you go, oh, you got too many lines in your charts. No, I know every line on the chart and why it's there. Right. So let me get rid of everything here. All right. So now we got a pullback here. Now your job. All right. Notice what they did again. Did they do a head fake? Here's the sideways move. Not successful. Head fake to the upside. Dumb money buys for the upside, and they cream them to the downside. You see what they did? They creamed them. Why? Because they know that there's $400 billion worth of dumb money in the market every single day. And those dumb money people are using indicators, and indicators need to be tripped, and they know how to do it. All right. So they flip them to the upside, everybody buys, and then they cream them to the downside. But was this still mathematically correct? Okay, so you can see here is the move that was previous to that. The pullback is my friend. Don't forget that. Yeah, exactly. Pullback is my friend. When I see a pullback, what do I know I got to do? I got to put a fib on it. So I pop a fib from the swing high to the swing low, and to the pip to the 618. All right, to the pip to the 618, close in reverse. Where do they go? To the bottom, to the 270, to the 618. Are they going to go lower? If they break up here and go lower, then we're going to the 1270. See? All right, let's see if they do it. No, that's it. That was in. All right, now you got a zero line break to the upside. Okay, so we remove all the tolls here, all that, and you see the zero line break to the upside. I already got 1, 2. I already got a pullback, and I got a second pullback. I got 2 pullbacks already. The first one sets the target. 1 right there, 382. 618, 270, 618, and 1270 is the outside target. Right, see that? Now we get another one. Ooh, baby, 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 come to Papa. All right, so now I'm going to take the fib from the swing low to the swing high. This one, 50% retracement. See, they don't turn in the middle of nowhere. Understand that. There's no such thing as I think we should go up. There's none of that. They watch for the mathematical number. So where's the target? The 270, the 618, and maybe the 1270 right there. Now, I'm on the AJ. Let's go back to the AJ where I got stuff on here. All right. So let's go back to the AJ and take a look at how all the stuff works in play. All right. So now we know how we get this number. All right. So I'm going to remove this. I'm just going to remove it. All right. I'm going to remove this one to the downside. It's all to the downside. All right. Now, I know that I need to fit from the swing low to the swing high for that pullback. So I pop it on here from the swing low to the swing high. Right there, and I got a 50% retracement at the bottom of the channel wall. Where am I trying to go? I'm trying to go to the 618 right there, right above the ATR. And there's the trade. It's already underway from the alert earlier that we just sent out. Right, there it is. It's right in front of you. Why? Because your job is to figure out what they're going to do with the information they have in front of them. All right. Now, here's the thing. You can't understand the information in front of you till you break it down into each and every piece, which means if I'm going to use this chart as an example, all right, so I got to use this chart as the example of what we should be looking for. All right, I have to do 300 channels. I have to do 300 retracement fibs. I have to do 300 extension fibs. I have to do 300 HSIs. Put the HSI on. If you don't have our charts, you can't do that, but and you'll be sorry you didn't. All right, so now I know the barriers to that target. That is still the target, but the barriers to the target are very clear and easy to see. There's a 270, there's the SR5, and then there's the ATR target right there. Now, if I get a pullback here, little pullback right there, this is a no-brainer trade. It's a no-brainer now, but it's an even no-brainer if I get the trade, because this becomes trade 1, this becomes trade 2, and this becomes trade 3. And because I've done the math 300 times, I know that they're going to try to do it with a high statistical probability. That's what I know what they're going to try to do. How do I learn to trade? I get the statistics on my side. That's how I learn to trade. How do I do that? I spend the time in the past. For every 1 hour you spend live, you need to spend 3 hours in the past. Wait a minute, that's a lot of work. Yeah, it's a lot of work. Are you want to be a trader? Did you want to be a trader? Yeah, that's what I signed up to be. Okay, then go do this stinking work. The number one reason traders fail, the number one reason is they don't do the work. It has nothing to do with their intellect. You know, when I talk to traders all the time, people will say, hey, Ben, I need to have a talk with you. I'd like to do this fast track. I go, okay, I'll do it. I hate to do it, but I do it. And I say, okay, let's talk. And you know what they say? Well, you know, man, I've been an engineer my whole life and I'm pretty doggone smart. And I really think I can get a handle on this. I already know they're in trouble. I already know they're in trouble. Why? Because they're basing their ability to trade on something that has nothing to do with trading. I'm an engineer. Right. And it's the same thing with the artsy fartsy people. I just look at the market and I kind of see it. And I go, yeah, that's right. You kind of see it, but you can't make a living doing that. You can't make a living being an engineer in the Forex. You can't make a living doing an artsy fartsy thing in the Forex. You got to know the math. You got to know the math. And what happens to traders? They blow out or they walk away. Why? Well, it's too hard. I was over at Forex Trading. All I kept saying was, go do the work, go do the work, go do the work. I've been doing the work. I've been trading for 3 years. I've already done the work. Yeah. What kind of work did you do? Well, I made pretty charts. Okay. You made pretty charts. Do you know what they mean? No, I don't have a clue what they mean. Do you know where the math is? No, I don't know where the banker's math is. See what I'm saying? All right. I've been training traders for 20 years. And I can tell you the number one reason traders fail is because they don't do the work. Number one reason. Yeah, but I got an IQ of 150. I ought to get this. You're already in trouble. Your IQ is too friggin' high. Anybody can trade if they'll do the work. Anybody can do it. Right? It's not rocket science. It is not rocket science. I know that because if it was rocket science, I couldn't do it. That's how I know it. Right? Now, the problem is, I want the math in my back. The problem is that traders do not do it methodically. They just want to trade. I just want to trade, man. Oh, I got these fibs down. I got a channel here. I know what it's doing. You don't have a clue what it's doing until you do 300 channels, 300 fibs, 300 fib extensions, 300 bull flags, 300 bear flags, 300 inverse head and shoulders, 300 head and shoulders, 300 rising wedges, 300 falling wedges, 300 triangles. You don't have a clue what the market is doing. Daniel, it probably does. That's exactly right. My low IQ will help because I don't have the ability to try to complicate this more than what I can see. And it's exactly what you see. What did I show you? Here's what I did tonight. I showed you the math and I showed you what they did with it. I showed you the math and I showed you what they did with it. What are they doing? Rocket science? No, they're doing the math. They're doing the math. All right. Figure out the math, get it into your head, and guess what? You can trade. You can trade. All right. Find the currency that does what you see easily. All right. Me, it's bear flags. Find what you do and become an expert at whatever that is. You can add stuff later, but the first thing you got to do is you got to earn while you learn. Earn while you learn. How do I do that? Number one way is to do flags. The number one way to do flags. And if you do 300 flags, you're going to start seeing this stuff right here. And you're going, wow, look at that sucker right there. What did they do? They creamed the dumb money, and that's what they did. See, you're going to start seeing them if you do 300 flags. Right? If you don't do 300 flags, all you see is 300 flags. That's all you see. You don't see what they do with it. Right? And you'll get caught in that. Especially when my RVI turned over, my slow stochastic went up, man, I'm in. And you're going to get creamed. You're going to get creamed. All right. So did that help anybody tonight? Pullbacks are your friends, folks. Pullback is your friend. All right. Don't forget it. The pullback is my friend. If the pullback is not in your past, it is in your future. Why were they able to move this thing like this? Because the pullback was in their past. Why were they able to move this? The pullback was there. Why were they able to do that? Because the pullback was in your past. But once you get it going, you know the pullback is coming. A Kmart trade one time. There you go. Yeah, exactly right. It's not rocket science, Tony. It's not. Right? So we went through these alerts. You saw my reasoning for why I put them out. You already see this AJ is working. Let's see what else we had. We had the GU. Of course, it's too early for the GU because it's a London market. It's not. It's in position, but not. Aussie can go right now, and they are trying. See that? Because Aussie, we're in the Sydney market. So there you go. They're trying to push it. Right. So you know what to do. Right. Yeah, good to see you, Donald. Always good to see traders come back. All right, let's go look at the Euro New Zealand. All right, there we go. Sweet. Come on, baby. Come to Papa. All right. Sit and duck, waiting to happen. Pull back behind me, close and reverse to the target. Sweet. Doesn't get much better than that, folks. Right there. All right, everybody. Hope that helped everybody. I will talk to you soon. Great being here with you. Your second best friend is going to be Mr. Pullback. Exactly right. All right, everybody. See you tomorrow morning. Take care.